Japan's crypto exchanges are simplifying the process for approving new cryptocurrency listings in an aim to boost the number that are traded in the country and catch up with the rest of the world, an industry body said on Tuesday. The Japan Virtual and Crypto Assets Exchange Association, or JVCEA, a group of 31 exchanges, plans to release a green list of 18 popular cryptocurrencies in late March, it said in an online presentation. Members previously needed to go through the association's screening process to list any currency, but those on the green list will no longer be subject to screening. US exchange Coinbase listed 139 cryptocurrencies for trading at the end of 2021. In comparison, only about 40 are listed on Japanese exchanges in total. The 1.18 trillion yen, or 9.8 billion USD worth of cryptocurrency held by users at Japanese exchanges as of January was also a fraction of Coinbase's 278 billion in December. Some industry executives said sophisticated traders have flocked to exchanges that do not have a license in Japan, such as Binance, partly due to the lack of options. The green list includes cryptocurrencies that are considered widely handled in Japan, such as Bitcoin, Ethereum, XRP, and Litecoin. Conditions for being added to the list include being listed on 3 or more exchanges, one of which has to list the currency for at least 6 months. The Japanese exchange with the largest number of listings currently is GMO Coin, which handles 20 cryptocurrencies according to JVCA official. Quote, only a handful of cryptocurrency exchanges are profitable because it took such a long time to get cryptocurrencies approved. Users also flock to overseas exchanges, said Genki Oda, a vice chair of JVCEA. Quote, the goal is to eliminate the time it takes to list a token and bring the industry closer to global standards. JVCEA was set up in 2018 as a self-regulatory body after a series of hacking incidents triggered intense scrutiny from regulators. But the sluggish approval of tokens has been a major roadblock in boosting the popularity of cryptocurrency in Japan. Each exchange had to go through a lengthy screening process, even for widely circulated tokens like Bitcoin and Ethereum, causing a large blockage of applications. In October, there was a pipeline of more than 80 applications waiting to be approved. The new measure will free up the JVCEA to spend more resources on approving new cryptocurrencies, as well as initial coin offerings and initial exchange offerings, an official said. Cryptocurrency exchanges in Japan have been falling behind their international peers in terms of token listings, so they're making efforts to speed up the process. On March 22nd, Crypto Potato reported that the Japanese exchange Coincheck announced plans to go public in the United States. The IPO will be via a special purpose acquisition company, or SPAC, through a partnership with the firm Thunder Bridge Capital Partners. Earlier this month, Japan made assurances that its exchanges would comply with any sanctions imposed on Russia. Japanese authorities ordered crypto exchanges on March 14th to not process transactions involving crypto assets subject to asset-free sanctions against Russia and Belarus over the war in Ukraine. The step was taken after a Group of 7 or G7 statement on Friday that said Western nations, quote, will impose costs on illicit Russian actors using digital assets to enhance and transfer their wealth. There are growing concerns among G7 advanced economies that cryptocurrencies are being used by Russian entities as a loophole for financial sanctions imposed upon the country for invading Ukraine. The US Treasury Department issued new guidance on Friday that required US-based cryptocurrency firms not to engage in transactions with sanctioned targets. We decided to make the announcement to keep the G7 momentum alive, said a senior official at Japan's financial services agency. Quote, the sooner, the better. The Japanese government will strengthen measures against the transfer of funds using crypto assets that would violate the sanctions, the FSA and the Ministry of Finance said in a joint statement. Japan has lagged a global shift among financial regulators in setting stricter rules on private digital currencies, while the G7 rich powers and the Group of 20 powerhouses have all called for greater regulation of stablecoins. Unauthorized payments to targets under sanctions, including through crypto assets, are subject to punishment of up to 3 years in prison or a 1 million yen or $8,487 fine, the FSA said on the 21st. There were 31 crypto exchanges in Japan as of March 4th, according to an industry association. Global regulators remain concerned about the safety of the new market for investors, given its surge in popularity. The US Securities and Exchange Commission has cited the potential for market manipulation as one of the primary reasons for rejecting several applications for spot Bitcoin exchange-traded funds. The majority shares of the new combined holding group called Coincheck Group NV would be owned by Coincheck's parent company, Monex Group Incorporated. Coincheck Group NV is expected to be listed on the Nasdaq after finalization of the deal by the second quarter of 2022, with the ticker symbol CNCK. SPACs are publicly traded corporations that do not conduct business. They sell their stock to the public to obtain funding for the future acquisition of a private company. The value of the merger deal is reported at $1.25 billion for 125 million shares, and upon completion, the combined holding company will receive $237 million in cash, held in trust by Thunder Bridge 4. The deal has been approved by the board of directors of Coincheck parent company Monex Group Incorporated, and Thunder Bridge 4. Coincheck and Thunder Bridge didn't respond to requests for comments from Cointelegraph at the time of publishing. After a data breach in 2018, Coincheck crypto exchange was acquired by Monex Group for $33.5 million, and the new combined holdings would act as a subsidiary of the crypto exchange's parent company. Monex Group currently owns 94.2% of Coincheck and will keep all of its shares at closing. The parent company is expected to own 82% of the merged firm. Coincheck won't be the first firm eyeing a public listing via a SPAC merger either. In fact, in 2021, several renowned crypto service providers and mining firms took the SPAC merger deal. Bakkt went public with a SPAC, while a $3.3 billion mining company chose the SPAC merger along with several others. Many market experts claim the reason for the high popularity of SPAC mergers is its distinct advantages over other kinds of finance and liquidity. SPACs often offer higher valuations, less dilution, faster access to finance, more certainty, and fewer regulatory requirements than traditional IPOs. But unfortunately, that's where our knowledge stops on today's subject. Let us know what you guys think of all this in the comments section down below. Coinbase, the publicly traded cryptocurrency exchange, has been on quite the listing spree over the last year. The exchange announced today that it now offers staking for ADA, the native cryptocurrency of the Cardano blockchain. Senior product manager Rumalini Sahu pointed to ADA's top 10 market capitalization and its flexible, sustainable, and scalable blockchain design. That design uses smart contracts similar to Ethereum and Solana to enable decentralized finance, NFTs, and other activities on the network. Cardano is a proof-of-stake cryptocurrency, meaning that its network is secured not through mining as with Bitcoin, but by people committing a portion of their ADA holdings to the network. In return, they receive a share of the newly minted ADA. The maker of the million-dollar monkey-themed NFTs Bored Apes Yacht Club startup, Yuga Labs, raised a seed round of funding. Yuga Labs raised a staggering $450 million from Andreessen Horowitz, and the firm's valuation now stands at a whopping $4 billion. This is the first time that the Bored Apes Yacht Club has raised funding, and venture capitalists are eager to back the project. Other investors apart from Andreessen Horowitz are Animoca Brands, Liontree, Sound Ventures, Thrive Capital, FTX, and MoonPay. The move could make Bored Ape the first NFT to hit the mainstream and generate curiosity from the larger audience. And if you enjoyed today's video, please be sure to leave a like, subscribe, and click the notification bell to stay up to date on all things crypto and NFT. Thank you guys for watching, and have a great day.